Welcome, everyone. This is Mardiak Market Update. I'm Mark Mardiak. I'm a senior wealth strategist with Premier Wealth Advisors and a registered representative with First Allied Securities Incorporated, member of FINRA SIPC. This show will explore topics ranging from market updates to the global economy and personal finance. Money is knowledge, and I understand life happens, and this program will help you navigate your relationship with money with timely guidance and a unique perspective. Thank you for joining me in this week's episode. Alternative investments is our topic today, and what place alternative investments should have in a financial portfolio. Alternative investments seem to be gaining popularity in recent years as both individuals and institutions look for ways to change their volatility exposure and potentially generate surplus returns beyond holding stocks and bonds. But first, the basic question: what exactly is an alternative investment? An alternative investment is an asset that is not one of the conventional investment types, such as stocks, bonds, and cash. That is, an alternative investment is anything not made up of cash, stocks, or bonds. Most alternative investment assets are held by institutional investors or accredited investors, accredited high net worth individuals, because of the complex natures and limited regulations of the investments. Alternative investments include private equity, hedge funds, managed futures, real estate, commodities, and derivatives contracts. Many alternative investments have high minimum investments and fee structures. There is also less opportunity to publish verifiable performance data and advertise to potential investors. Most alternative assets have low liquidity compared to conventional assets. For example, investors are likely to find it considerably more difficult to sell an 80-year-old bottle of vintage wine compared to 1,000 shares of a big board stock due to a limited number of buyers. Big board stock meaning a Dow Jones Industrial 30 stock. New alternative investment vehicles and new platforms have become available to the high net worth retail private client sector in the past decade. Morningstar identifies three types of alts: non-traditional asset classes, non-traditional strategies, and illiquid assets. Some data show more diverse portfolios have performed better over the past 25 years than less diverse ones. But most advisors, like me, and me included, are still hesitant to add alts to client holdings without the client's thorough and full understanding of the lockup periods involved, the minimum investments involved, the understanding of the fee structures, and exactly what are the underlying holdings. Many advisors are hesitant to recommend alternative investments because of the potential for a total loss of funds invested. While the list of alternative investments is extensive, some of the ones you might encounter in the real world include, but are not necessarily limited to, the following: real estate, tax lien certificates, stock or membership units in a privately held or closely held business, commodities, including precious metals such as gold, silver, platinum, and palladium, as well as crude oil, natural gas, ethanol, corn, soybeans, wheat, cocoa, coffee, sugar, frozen concentrated orange juice, oats, live cattle, copper, lead, zinc, tin, aluminum, nickel, and cobalt, managed futures, farmland, timberland, mineral rights, intellectual property such as copyrights, song rights, patents, and trademarks, and the list goes on and on. Feel free to contact me via my website, markmardiak.com, if you want more examples of alternative investments. What place do alternative investments have in your portfolio? Well, if you're an institution, your investment officer and your investment policy committee will dictate that. If you're an accredited investor, your investment advisor at the firm that you work with will help you determine that. But there are several reasons an investor or a portfolio manager are likely to consider adding alternative investments to the balance sheet. Alternative investments as an asset class allows clients to be less dependent on good stock and bond market performance and to potentially have downside protection during market downturns. Alternative investments typically have a low correlation historically with those of standard asset classes, again, specifically bonds and cash, and equities, which makes alternatives suitable for portfolio diversification. Along with benefits, though, there are risks. Firstly, alternative investments can be complicated and involve significant hidden risk. All of this information is for you to make an educated determination as to whether the alternative investment asset class should make up an asset class in your investment portfolio. This information is not intended as a substitute for individualized professional advice and is not intended to advocate or solicit interest in any investment. Investing in real estate or REITs, real estate investment trust, involves special risks such as potential illiquidity and may not be suitable for all investors. There is no assurance that the investment objectives of a program like this will be attained. Investing in MLPs, short for Master Limited Partnerships, involves additional risk as compared to the risk of investing in common stock, including risk related to cash flow, dilution, and voting rights. Each fund's investments are concentrated in the energy infrastructure industry, with an emphasis on securities issued by MLPs, which may increase volatility. Energy infrastructure companies are subject to risks specific to the industry, such as fluctuations in commodity prices, reduced volumes of natural gas or other energy commodities, environmental hazards, changes in the macroeconomic or the regulatory environment, or extreme weather. MLPs may trade less frequently than larger companies due to their smaller capitalizations, which may result in erratic price movement or difficulty in buying or selling. MLPs are subject to significant regulation and may be adversely affected by changes in the regulatory environment, including the risk that an MLP could lose its tax status as a partnership. Additional management fees and other expenses are associated with investing in MLP funds. There are substantial risk and conflicts of interest associated with managed futures and commodities accounts, and you should only invest risk capital. Risk capital as defined by you, your investment policy statement, and your investment officer's mission, as well as objectives and goals, as well as working with your advisor if you're a private retail client. The success of an investment is dependent upon the ability of a commodity trading advisor, CTA, to identify profitable investment opportunities and successfully trade. The identification of attractive trading opportunities is difficult. It requires skill and involves a significant degree of uncertainty. CTAs, commodity trading advisors, have total trading authority, and the use of a single CTA could mean a lack of diversification and higher risk. The higher degree of leverage often obtainable in commodity trading can work against you as well as for you, and can lead to large losses as well as gains. The price of commodities, such as gold and currency, is subject to substantial price fluctuations of short periods of time and may be affected by unpredictable international and political policies. Monetary policies as well play a big role in the prediction or the determination of what's going on with price fluctuations, especially over short market volatility periods. The market for commodities and currency is widely unregulated, and concentrated investing may lead to higher price volatility. Foreign currency trading carries a high level of risk and can result in loss of part or all of your original investment. Well, that's our discussion on alternatives for this week's episode. I hope you enjoyed it. That's a wrap. I'm Mark Mardiak, and thank you for joining me today. If you have questions about this topic or would like to further discuss it, please don't be afraid to reach out. I'm also happy to answer any questions you have about your financial portfolio. Remember, I'm here to help. You can find all of my podcast episodes on my website at markmardiak.com. Tune in next week for Mardiak Market Update. Enjoy your week and your weekend ahead, everyone.